Top news this week. Stocks are kissing all-time highs. Bonds are having their worst week since summer. And Bitcoin is stuck in a pressure cooker after a trillion-dollar crypto wipeout. Let's break down what actually happened in markets and crypto and what to watch for next week. Hey everyone, Vincent Davenport here. Welcome back to the channel. Quick disclaimer before we dive in. This is not financial advice. Always do your own research and never invest money you can't afford to lose. Story 1. Stocks near record highs. Bonds get smacked. The S&P 500 spent the week drifting higher and is now just a touch below its all-time high, with the Nasdaq also pushing up. It hasn't been a wild meme stock kind of week, more like a slow grind higher. But under the surface, something big is happening in bonds. Treasuries are on track for their worst week since June, with the 10-year yield hovering around roughly 4.1%. That means prices on existing bonds are falling as yields move up. Why this matters? Higher yields compete with stocks. Investors can suddenly get a more interesting return in safe bonds. At the same time, equity traders are still betting that the Fed is going to stay in cutting mode, which supports risk assets. Story 2. Fed cut hopes versus Japan's potential rate shock. Next, let's talk central banks, because they're still the main character in this story. In the US, markets are pricing in a third straight 25 basis point rate cut from the Federal Reserve on December 10th. But Fed officials are split on how aggressively to keep cutting in 2026, with some more worried about inflation, others about the labor market. Meanwhile, Japan has become a wild card. The Nikkei slid this week as speculation grew that the Bank of Japan might actually hike rates this month, ending years of ultra-easy policy. At the same time, the yen is on track for its strongest weekly gain against the dollar in more than 2 months. Why this matters? A BOJ hike could unwind years of yen carry trades, cheap borrowing in yen to buy other assets. That can ripple across global risk assets, including US stocks and even crypto, as funding conditions tighten. Story 3. Copper at record highs, gold creeps up. Let's move to commodities. This week, copper exploded to a fresh record above $11,400 per ton on the London Metal Exchange. Traders are watching a mix of strong demand from electrification, EVs, and data centers, limited new supply and mining challenges, and the idea that if central banks keep cutting, growth pockets could stay hot. At the same time, gold has been edging higher as rate cut bets build, acting as a hedge for people who don't fully trust the "everything is fine" narrative. For ordinary investors and business owners, this combo, record copper plus firmer gold, is a quiet signal that the real economy still needs a lot of metal. But there's enough uncertainty that people want some insurance too. Story 4. Crypto's December drama. Crash, then compression. Alright, let's shift to crypto, because it's been spicy. Over the last 6 weeks or so, the crypto market has been through one of its sharpest drawdowns in years, wiping out around $1.2 trillion in total value as Bitcoin dumped more than 30% from its highs and even dropped below $90,000 at one point. This week specifically, Bitcoin has been chopping between roughly the mid-$80,000 area and the low $90,000. Some analysts say BTC is in a high-tension consolidation zone, where volatility is compressing before the next big move. At the same time, ETF outflows have picked up, risk appetite across assets has cooled a bit, and a lot of the wild six-figure price targets for 2025 are looking optimistic at best. For traders, this is classic crypto. Fear is high, leverage has been washed out, and both bulls and bears think they're about to be proven right. Story 5. Whales, ETFs, and regulators step in. Whales and leverage. On-chain data showed BlackRock moving about 1,385 BTC and nearly 800 ETH to Coinbase, while SpaceX shifted over 1,000 BTC from its holdings, all ahead of a key US inflation print. That kind of size can easily spook the market. Meanwhile, leveraged ETFs tied to big Bitcoin holder stocks have been hit hard, with the slump in BTC smashing the underlying shares and amplifying losses for anyone using leverage. It's a textbook reminder, leverage cuts both ways. Regulation. In Europe, Italy's economy ministry has launched an in-depth review of crypto risks, especially around retail investors and how crypto links into the broader financial system. In the US, a major crypto market structure bill is still stuck in the Senate over disagreements about stablecoin yields, conflicts of interest, and how to handle DeFi. For the crypto space, it means 2026 is likely to be heavily shaped by regulation, not just price charts. Takeaways. What to watch out for next week. For markets, watch the Fed meeting on December 10th and the incoming inflation and jobs data. Do yields keep pushing up, or does the bond market calm down? For global macro, keep an eye on Japan and the BOJ. A real rate hike there would be a big regime shift that could ripple across global risk assets. For commodities, if copper stays at record levels while gold also grinds up, markets might be quietly pricing both growth and uncertainty at the same time. For crypto, key BTC zones, the high $80,000 support and low $90,000 resistance. A decisive break either way could set the tone into year-end. Watch for more whale transfers, ETF flows, and regulatory headlines. They're moving the market as much as pure technicals. If you found this weekly wrap helpful, hit like, subscribe, and ring the bell so you don't miss next week's breakdown.